We saw the NSE better up just over 10%, but volumes dropping by $16 million. Are we seeing a pullback by foreigners given the surge in risk aversion globally?
Hello, Sue. Thanks for having me. Yeah, in a way, I would say there's been some form of pullback from foreign investors. In a way, we'll say that they're more or less sitting at the sidelines right now watching, while local investors take positions and make investments. Like yesterday, for example, we could say that there was an estimate of about 70-30% participation where the local investors took charge of the market, while only 30% of trade was done by foreign investors.
I wanted to just get your thoughts on a couple of results. Guiness out with Q3 pre-tax profits, Q3 results. Its pre-tax profit drops 14.5%. But on the other hand, we are seeing revenue growth in that company of 25%. Where is all that money going?
In a way, I would say most of the money has been going to marketing and more like building brand loyalty, because the company has actually tried to. They've been doing a very strong campaign right now at the back of the current World Cup that is coming up next month. And what the company has really been doing is try to increase its market share as well. Because if you're aware, Nigerian breweries, which is its very close competitor, controls a larger share of the market. And I think what Guinness is trying to do right now is to increase its market share also. And that it can really do that more through marketing. And even though in terms of efficiency, really, you'd say that Nigerian brewery still looks more attractive. But I think the fact that the company currently is making long-term investments shows that there will be value in the long term.
Mm-hmm. But if they don't have market share, why are they then spending their money on branding rather than pumping the money into improving their capacity to compete with Nigerian breweries?
The issue is not so much of capacity per se, because in terms of capacity, I think the company really does have enough capacity. And like you said, the turnover increased by 25%. So in terms of capacity, the company does have the capacity to increase and meet production. But I think what it's doing right now is to try and increase demand through marketing and trying to make its consumers more, and even try to steal consumers from its competition, which is Nigerian breweries.
Mm-hmm. The stock didn't perform yesterday at all. Are we going to see some buying or selling on that counter today?
In a way, I would still expect that flat performance, because in terms of valuation right now, we see it trading at our target price already. Our target price for Guinness is 162, and it's going to trade at 161. So in terms of appreciation, you might not see any more appreciation. So you might see more selling really than buying on that stock right now. And also for valuations, it's trading higher than the market right now. The current PE is about 18 times its earnings, while market is trading at 16 times earnings. And its competitor, Nigerian breweries, is also trading at 16 right now. So you could say that it's overvalued when you compare it to its competitor, Nigerian breweries.
Right, let's move on to another sector in which Oando is present. Oando yesterday up 2.3%. Oando reported its Q1 pre-tax profit up more than doubling at a 105% in the 3 months of this year. And this is on the back of increased earnings from midstream and upstream divisions. Is this a stock in your books, considering their prudent usage of their capital from their rights issue recently?
The rights issue fund was just got, so I wouldn't say it's so much of efficient use of that, because it will take a while before the company deploys that fully. But in terms of efficiency, the company really has improved efficiency significantly, and it's still one of the strong buys for us. In terms of valuations, it's trading at 7 times PE compared to the sector average of about 12 times, and even a market average of about 16 times. So I'll say it's still looking quite attractive. Our target price for the stock is still at 170, and so it shows that there's still a significant upside as well. And there's also, in terms of its expansion into the exploration and production, there's lots of capacity for the company in that area, and also avenue to increase revenue as well. So I would say that there's really lots of potential for the company going forward.